Welcome to TheoTrade. This is Don Kaufman. It's March 8th, 2023. Just about 20 minutes to go to the cash close here on this Wednesday afternoon. The S&P 500 massively unchanged in a trading session that can be only termed an absolute slop fest of a trading day. Nevertheless, risk builds as markets become completely data dependent. Now, I know what everybody's thinking. They're going to look over at VIX, right? And you're going to go, no, the market, the risk is coming out. Just wait a moment, because we're going to look precisely at that, okay, in this evening's video, because I'm going to tell you right now, the VIX, it's dead. And by dead, I mean the VIX is a 30-day measurement of volatility inside of the SPX. The VIX equation, though, happens to be blind to what's going on in the shorter duration. And that's exactly what we're going to talk about here, because everything now, because Jerome Powell has spoken, everything becomes complete and utter data dependency. I mean, data-driven risk. It's all-time highs right now in terms of data-driven risk, whereby ultimately every single economic data point that we get from this point forward is going to turn the markets into this wild binary ride. Let me show you precisely what I mean. So, back over to the generalized markets. The S&Ps having a bit of a rally, if you will, into the end of today's trading session. Look, there's just nothing to see here. All you're looking at on an intraday basis today is pure and utter noise. If there's anything to take away, okay, from today's trading session, all right, it has to be the SPX, the mother of all products. The reason I'm already going to key into the SPX is because the SPX effectively has tagged the lower edge of its expected move for the week. Now, for those of you that actually tune in on kind of a day-to-day basis, we talk about expected move just incessantly. Expected move for this week is plus or minus approximately $78. All right, here's the expected move, which is basically 39, we'll call it 68. What do we hit today for a low? Oh, 39.69. Does that count? I think that's a gimme. I think it's a gimme. It's a $4,000 product. You're a couple of pennies away. Just give it to me, all right? So we tagged the lower edge of the expected move. Well, we bounced a bit off of it, but neither here nor there, okay? I mean, that was the only, if you will, pivotal thing that's really occurred inside of today's trading session. We also saw at one point bonds rally up. They faded a little bit, okay? But the one interesting aspect on that front is, the bond market, it did not impede upon the financials as much as I would have thought early in the trading session. Nevertheless, the financials, okay, they are still unequivocally at the forefront of the price action, okay, that we're seeing right now to the downside. I want to take a look at the financials for a moment to kind of give you a, hey, look, orientation of what's really going on, outside of the S&Ps and what's driving markets. Take a look at the financials in what we term auto expected moves. Once again, the expected move, okay, is how the option market depicts risk. And what I want you to see inside of the financials is that early in today's trading session, we're literally, okay, 2 times expected move, which is what they term a 2 sigma move, okay? That is not something that is going to be a positive. And what's interesting is even with today's market that's bidding right back up into the close here, okay? And yeah, you can see the XLF trying to pop its head back up. It still has brought, okay, the financials nowhere near the lower edge of their expected move. Now, to give you, again, some orientation, the financials are leading markets this week to the downside. And one thing I've been just so incredibly adamant about, I've been adamant about this, okay, since the beginning of the year, if markets are to stage a more significant down move. I've said this time and again, unequivocally, it would be done on the back of the financials. And here we're sitting with financials well outside their expected move. Okay. Another area worth noting that often moves with some of the financials is you do have the energy sector also cracking mildly outside of the expected move. But in terms of sectors that matter, yeah, it's all about the financials right now. And this is where somebody says, well, what about tech? What about tech? Okay. Look, tech already got decimated, if you will, last year. It's got a bid underneath it, right? On a year-to-date basis, the Qs are basically up about 12%. If you take a look at the financials are almost massively unchanged on the year. Meanwhile, the energy sector, yeah, like that, it literally is massively unchanged in the year. Okay. Watch these financials for the remainder of the week. You're going to get a wild 3 sigma move. Okay. That is, all right. If the financials continue to break lower, that would be it. It would actually start to break the back of the S&Ps. You're at a point in time where, yes, Apple's still a mega market cap. Unequivocally, so is, Microsoft. Yeah, Amazon. You're still dealing with some $1 trillion market cap. Nevertheless, the financials, okay, that has really caught up in many cases. Not as big, of course, as some tech, not even close. However, as I'm saying this, recognize, right, come March 17th, there's going to be new stocks in the financial sector, including stocks to the likes of PayPal, Visa, MasterCard, which is going to give even more power to the financial sector in terms of overall market capitalization. Those are some very, very large market caps. Okay. Again, before we even get the MasterCard, the Visa, break lower in the financials will snap the back of the S&Ps, and you'll see broader sell side activity in the entire market. Now, let's go back for a moment and talk a little bit about what I term risk building and us, becoming completely data dependent. Why do I say that? Well, again, we come back to the SPX, right? So the SPX effectively already tagged the lower edge of the expected move, a $78 expected move, yada, yada, yada. Come over here to the trade tab with me. As I was actually saying, so later this week on Friday, you're going to have to deal with the jobs number, okay? Should we have concern that the jobs number is coming out? Well, to answer that, okay, we need only look specifically, okay, right here at Thursday, okay, and of course Friday in terms of what? Implied volatility and expected move. So one of the things that I want to point out, and again, I know some people probably watch this on mobile, so I'm going to read it up over here. Thursday, okay, you're looking at about an 18% vol, right? So that's Thursday. Friday, we're actually jumping to a 24%, right? So it's almost like the SPX has an earnings announcement. That's how significant it becomes. And, moreover, instead of just looking at the implied volatility, which honestly, the IV doesn't make a whole lot of sense to people, okay? Between now and Thursday, the end of Thursday, looking at about a $30, okay, expected move. I like expected move a lot better because it basically takes this, I guess, esoteric, implied volatility and converts it. And then you come into Friday, and Friday you have basically a $57 move priced in. So one of the crazy things is, we're already beyond halfway through the week. And the entire week was pricing a $78 move. Now we still have $57 left, okay? And that's just for Friday. So put on your big boy pants, and I can tell you right now, I can already see the implied volatility that is building into next week. You go, what do you mean you can already see it in next week? Yeah, next week. What's coming next week? Yeah, CPI. You can already see it. It's insane right now because every one of these data points that's coming out, and when I say like CPI, look, I don't have to go out there and even know where the calendar is because I can tell you right now, something is coming. Even if I didn't know it was CPI, I can tell something is coming on March 14th because implied volatility for Tuesday is already divergent from Monday. Monday is only a 17 vol. Tuesday becomes a 21 vol. So this is where I got to tell you, again, You have to kind of every single day now, you got to put on your big boy pants and you got to know the calendar, or you got to look at this implied volatility, because what's going on in the SPX, all right? The VIX is too long term. The VIX is completely dead. Like don't worry about, oh, the VIX could still spike, and it could still spike. That's longer duration volatility. With the VIX that was not showing you, again, the VIX equation is completely blind to any options that have less. Any options that have less than 9 days to go to expiration are not even in the VIX equation. And you can look at, like, short-term volatility equations. What's a short-term volatility? You can look at like a 9-day, all right, like a 9-day VIX, and people will look at this and they go, but even the 9-day VIX doesn't do it justice. But I will show you that the 9-day VIX, ironically, it's picking up a little bit. I mean, it's come off a bit today, but today there was some data dependency, right? Because Jerome Powell was speaking. Nevertheless, like, even 9-day VIX is not great. You got to actually look at the SPX chain, and I'm telling you right now, all right? The risk continues to build over here, but a 24 vol, neither here nor there, but a $57 expected move between now and Friday, okay, is huge. And I expect that this could still go up, depending upon how things kind of play out in the next few hours of trade, specifically tomorrow. And of course, next week we're going to be dealing with CPI on Tuesday. Oh, that is just going to be magnificent, people. We're in just a data-dependent world. We're all just living in it. At this point in time, those data dependencies are going to cause these wild binary moves. Look, you sell some premium, you get back, you reduce risk. What else can you possibly do? Okay, you don't want to get caught in the crossfire of this marketplace right now, because we're what? We're one hot announcement away from the S&Ps being, higher or lower by 200 points. When I say a hot announcement, that could be, for instance, CPI coming in hot, okay, or the jobs number that's coming out Friday. Ooh, maybe it comes in a little soft, we rally up 200. But if it comes in hot, okay, we're down 200. That is the marketplace that you're going to be living in it. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.